Well, I think that what you have to recognize is that Jay Powell is unique in that he hasn't said there'll be lockstep increases. He can change his mind. I mean, if everything goes his way before he even gets started, wow, how terrific is that? Again, President Biden playing a uniquely bad role here by thinking that there's nothing he can do with the oil companies, where the oil companies are simply waiting for him to make deals. Now, he's spoken to the oil companies, just doesn't want to come out and say this, because what will happen is that there's a considerable cohort in this country just despises these guys, yet they are the key. Now, they are really what I think is the last of the inflation in the system, except for housing. And, Carl, you know, when you raise mortgage rates to 5-6%, the people who did the lock-in of the 3-4 are almost done. By mid-June, they'll be done. And then we'll see what the market's like when you have to pay higher rates, say $400 per month more, when you buy a $900,000 house from Toll. Toll's done some good work saying that they're not hurt. The luxury side of everything is not hurt. Luxury side of retail is not hurt. But, Carl, if we sit here and we say Jay Powell's winning without doing anything. And so he's not going to sit there and say, I want a double win. It's not a double header. So let's just keep in mind that you can win without having to do that much. And that seems to be, if I were Jay Powell, I'd say, wow, thank you, Target. You're the beginning. Obviously, a lot of the port congestion is related to inventory. The inventory that started in China is going to be worth a lot less when it gets to the United States. This is normally what we would say good for inflation coming down. But in the interim, we have to have all the stocks marked down. How many price target cuts are we going to have? Analysts didn't know this was coming, so they're obviously going to downgrade. And it's only after tomorrow that you can take a look at these stocks.
Yeah, I know Jan Niffen, retail analyst, was on Squawk this morning. Jim called at least the Target inventory scenario a pig in a python, meaning if they do, in fact, clear this out, set you up for a better fiscal second half. I know the Today Show this morning had an entire piece about surpluses in apparel and home goods and kitchen appliances. I wonder if you think this stuff gets cleared if the back half of the year does look good.
Yeah, well, look, let's say you're Brian Cornell, and I spoke to him last night, and you've got back-to-school season coming up, and you have the holidays. They do a big Halloween. There's a lot of seasonal stuff. You have Thanksgiving. Well, if you're stuck with all this hard goods merchandise, it's taking up a lot of space. And you know what's really funny? And David and I like to laugh at these things, but there's some guys who are trying to buy Kohls. Now, that's the dumbest thing you could possibly do after what Brian Cornell said. But, David, once you're involved in the process, does it really matter what the news is? It's no different from Tiger Global. Global, I like that. Once you're involved in the process, you're just full speed ahead. David, why would anyone buy Kohls knowing what Brian Cornell said just last night and this morning?
Well, Jim, I'm not going to answer that, as you know. I'm not going to be able to. I don't know what it is that they see as a real opportunity here in Kohls. They're offering $60 a share.
Sake.
I'm sorry. Well, you know, listen, I haven't paid close attention to this auction, but it does appear to have taken a step forward. There's no doubt about that. That's reflected in the move you're seeing in Kohls' stock price.
If you haven't caught up to the news, you will not call this stupid because you're a reporter and I'm a commentator.